Hello, you big carrot. How are you?
Pretty good. Good to see you.
It's good to see you, man. So last time I saw you, you came to Bedford, which was very cool, and you kind of called the bottom,
More or less, right?
more or less. How close were you?
I mean, yeah, I think we were past the June lows then, right? Like we had this huge capitulation event in June, and I don't exactly know when we recorded, but it was soon after, right? Like
I think it was in August.
It was in August,
and the
okay.
low was maybe a month later.
Yeah.
But it was. I mean, we were pretty much there.
No, the low, the final low we've had has been in November, right? So
Is that right?
yeah,
Was it really August?
Yeah, I think so.
Gosh, such a long time since then.
it was good weather in Bedford.
It was good weather in Bedford. I'm bringing the trophies with me now.
Congratulations! Yeah.
Thank you. So, but you called the bottom. Look, we used to make shows about the Bitcoin numbers, about the charts. We used to do it with Willie, and we stopped doing it because we didn't want the show to be about that. But I don't mind making it with you because I think it's more about the data and what it's telling you. And so I found that last show we made, I found it very, very interesting just because of the way you look at the data. It was really popular as well. Had a lot of great feedback. So thank you for coming back on. At the same time, I think today you're going to tell us about When Moon, right?
Well, I thought to do a bit of a follow-up of the last show. So I kept most of the charts from the last show in there, and I just thought let's go through them again and see what they tell us now. So yeah, obviously, so we had the June low back in August, and that was in. Yeah, I think if I remember correctly, I said like that it was likely to have another low, potentially a new bottom, like later that year, and that happened in November. So that was kind of on point with the whole cycle analysis. And yeah, I think if we look at the charts, we will you will be quite amazed. I think yeah, I'm also gonna discuss some more bearish scenario, but in general, I do think it will be a quite bullish session again. So. Well,
awesome. Well, so it sounds like you're a cycle maximalist, a bit like Rizzo. Pete Rizzo said that to me. He said, don't give me any theories. Don't give me any of that nonsense. He said, I'm a cycle maximalist. It will always play out the same.
Yeah.
All right. So for anyone listening, we've got another presentation here from the Carrot, and we will explain it as best possible so those listening can understand what we're talking about. But also, it would probably be worth going to check out the video on YouTube if you really want to see the charts, because we'll edit them in, right, Danny?
Yeah.
All right, cool. So where do you want to start, man?
Yeah, we're going to start again with a spiral chart.
Love this one. I think this is my favorite chart. Do you want me to hit it in?
Yeah.
So if you haven't seen this chart, well, how would you explain it? You'll do a better job than me.
Well, if you say that the halving is the catalyst of each bull market, which kind of traditionally it has been in Bitcoin, due to the supply shock a little bit caused by the halving. Obviously, that's kind of that effect is diminishing, but it still has been the catalyst for each bull market. So if we take the spiral and we count in block time in this case, each halving is 210,000 blocks. So a full rotation in the spiral chart is 210,000 blocks, which is a little less than 4 years. And so if you do that, if you plot all the data points, then there are some interesting observations that you can make. The all-time highs and the bottoms, they kind of fall at a similar point in time if you do that. And besides the fact that the beautiful thing about the spiral chart is that without any model, it's possible to see Bitcoin's price spinning outwards. So you don't need any model to see where Bitcoin's price is going. So if we keep on following the same pattern, Bitcoin should reach between 100 and 100,000 and a million in next cycle, and possibly higher after that, like so that is quite bullish
if it continues to play out the same.
Yeah.
So, like, I'm with you. This is, I think, is such a super interesting chart. What I can't decide with the halving driving the cycle is there some economics to it, or is it the narrative?
It's also a bit of a narrative. I mean, I think in the early days, the effect of the halving was obviously more intense, like than it is now. That's why I like it to call it the halving hype cycle, because there's also just a lot of hype around the halving, which also obviously has an effect on price. And so it can still serve as a catalyst through this narrative, right? Like so, but yeah, indeed. But if we look a bit at if we zoom out even a little further, if we look at a bit of the macroeconomic picture, we can kind of also see that Bitcoin followed similar patterns to, for example, the S&P 500 or so. So it's not just that the halving. We cannot not say that the halving was the catalyst of each cycle. Bitcoin has been Bitcoin came forth out of the 2008 financial crisis, and so and Satoshi, for some reason, chose this 4-year period as a to have these halvings, and that kind of perfectly aligned also with the bigger macro picture. And so it's and we'll get to a chart as well later to show that.
And for the next cycle to fall between 100,000 and 1 million is quite broad.
Mm-hmm.
Why have you chosen those as the numbers so people understand?
Well, that is just simply looking at if we cross the 100, it seems like we're going to cross the 100,000 mark at least next cycle if we continue the same pattern in the. I actually don't think next cycle we will necessarily cross the million mark. Like that would maybe be for the cycle after that. But it seems like it's kind of impossible to not go above 100,000 if we follow the same pattern in the spiral chart.
And these red dots in the spiral chart, are they the bottom?
Yeah, those are the bottoms. Yeah.
And they look to be within just a few blocks of each other.
Yeah,
each 210,000.
If you go to the next slide, I drew a line from the center, and you can see that actually amazingly. But this is in Bitcoin time, so it's in block time. The all-time high from the last cycle and the current cycle, and also the bottoms from the last cycle and the current cycle, they are just like blocks apart, which is quite astonishing. But it was hard to predict this pattern because obviously the cycle before that was a little more shifted. So I still think also that using human time, like just years and months, is in general better to look at the chart than in block time, because people don't think in block time, right? So it's but it's still astonishing that the all-time highs and the bottoms fell nearly at the exact same moment in the cycle.
And you know what? The one in the previous cycle is still fairly close, especially on the bottom. Yeah. But to me, that says this is more like a maturing market. It's as it's matured, there's become some consistency because it's still not that far out. That's within 1/8 of the quadrant.
Yeah. It's still very close. I agree, and it seems to be that indeed this pattern could continue unless we deviate away from the halving cycle, which is still a possibility as well.
So, what block is the all-time high going to be at? You must have looked that up.
It's right in the chart, right? It's
did it say?
It's the 78,000, a little more, no?
Of the cycle.
Of the cycle.
So what that is? What's that?
That's maths I can't do.
Hold on, it's 210,000 times 4 plus, or times 3 plus.
Yeah, so
1,
it's
2, 3.
It's also in the chart.
Yeah, so it's 4 times 210,000 plus.
Yeah, it was the 630 plus the let's say 80,000.
So it's about 710.
710. Yeah, that was more or less.
We need to be able to put alarms on our phones, play some blocks now. Block time. Can we do that?
Probably.
NVK, well, saying block clock.
Yeah.
Okay.
Block alert.
Block alert. Do you yourself trade based on this data?
Yeah, I do on a cycle basis.
Yeah.
Yeah.
Interesting. It's fascinating. It blows my mind.
I'm not a day trader. Like I cannot tell where price is going tomorrow. But on a cycle basis, yeah, there are definitely very good patterns.
There are 2 trades you need to make on the cycle.
Basically, yeah.
It's fascinating. The other thing I like about it is that the way you track the price in the spiral chart, the lines have never crossed.
Exactly, yeah.
And it's quite an important thing to maintain, quite an interesting thing to maintain.
Yeah, if we would cross, that would, I do think, and I think I already mentioned that also in our last interview, is that that at some point in time we will likely cross, because I do think cycles are, for now they're not shifting, but it's very likely that they will shift at some point in the future. And also if price is gonna stabilize a bit more at some point, maybe also it becomes more volatile first, but eventually, who knows? Measured in USD, it could actually become more volatile. We'll also get to that, but if the market cap grows, it could happen that the lines will cross at some point in time. I still think that the spiral chart will be useful even if that happens. But it's cool for now that it hasn't happened.
Yeah, and I think one of the things that supports that is the liquid supply appears to always be falling as we have new Bitcoiners coming in, becoming hodlers. And then you add into that, there's less new supply coming in every day after the halving. You can see why there's a certain catalyst for it to keep growing like this.
Yeah, exactly. Yeah, and I'll get to that in some of the charts as well. I made the Hodl model, which we discussed also in the last interview, and there's definitely some interesting observations there that are actually very bullish.
All right, let's go to the next one then. Okay.
Yeah. So. Here we continue with the spiral chart, but now we use just normal time. So this is the 4-year cycle, which also is a common term in Bitcoin, right? But you can see now that the green dots, they are a little. Those are in the northwest, let's say. They are a bit. They're not completely on this on the vertical line. Let's say where the 4-year cycle starts, and because the halving is a little less than 4 years. So now one full rotation in the spiral represents 4 years, and obviously it's on log scale. So each ring, going outwards is times 10. So it goes from $1 to $10 and so forth. The most outer ring is $1 million in this case, and what the cool thing about looking at this in human time is because we can track a bit better seasonality as well. So it seems every 4 years at least around Christmas time we have this all-time high. It again came true this cycle, and the year after around Christmas time we have we have a bottom. Those red dots in the bottom.
And they're even closer. The bottoms are even closer on those 3 years, based on time.
Yeah. So you can see that the halving kind of shifts back a little bit. I also added in the predicted halving of this. So there's one green dot there. That's actually, I put that at 40,000 because I think that's a reasonable price to make at the next halving. But you can see that again, that's a little shifted. It's a little earlier in the cycle. We will reach that point a little earlier than the previous halving in the same cycle. And so the halvings, so the cycles are shifting a little bit, and you can also see that in the bottoms very well, right? So all those 3 dots, they appear a little earlier in the cycle. Also the all-time high in the last cycle, at least it did not in the previous cycle. But yeah, so the cycles are shifting a little bit there. But yeah, most of the all-time highs are all made in that first quadrant, which is one very interesting observation. And I think all bottoms are in the south, And it's very likely that if we continue the pattern with the cycle, that the bottom is in this time. Like, I'm way more confident now than I was last time. Last time we had like this capitulation event in June, which was a true capitulation event. Like, it was a significant one, like comparable with bottoms of other cycles. So, but time-wise, there was still this the south of this chart that like kept saying like, okay, we can make another low there, and I warned for that last time, and indeed that it did happen as well. We made another low, although I was not sure if we were going to make another low, but I did expect some downside still in that south area. But we did make another low, and that was also mainly due to like the events that happened around FTX, and so if we didn't have an FTX, so maybe we would have just made like another low, but not an not a cycle low there. But in this case, we did.
Isn't it strange though? Every cycle we find a reason or something happens that does cause that.
Yeah, I mean, it's not that strange, because if price starts going down, things start falling apart. So it's just like this waterfall effect, and so it's not that strange. But there's some event that will happen indeed, and it depends on which one.
So Christmas time is going to be good.
Not
this year, next year.
Yeah. So we're still a year away from the halving, and basically if we would make an all-time high again at more or less the same time in the cycle, that would be two years out.
All right, man.
Yeah, here I marked still the all-time highs, the bottoms, and the halvings.
That's mad.
That they're like all at exactly the same moment in the cycle.
And they're basically within about a month of each other, it looks like.
Yeah, more or less. Yeah.
Hold on. Each quarter is a year. Yeah, it looks like within about a
more
month.
or less. Yeah, it's really close to each other.
I'll be interested to do this again in 2 years if we're plotting it the same.
Yeah, I will be too.
All right.
So this, I had that in there as well the last time. This and it's actually very interesting. This is the same. I mean, the price pattern is just on the 4-year cycle again, except now we color coded the chart and based on the short-term holder cost basis. And the short-term holder cost basis is really an amazing, very powerful on-chain metric, in my opinion. There's so much information that you can pull out of that classification.
Do you want to explain what it is?
Yeah, so the short-term holder cost basis is actually the same as the short-term holder realized price. So to say again first, what is the realized price? The realized price is the average purchase price of all Bitcoin. So all transactions on the blockchain, we can look at the price that they moved, and so the average price that we get is the realized price. So it's the average investor price, basically. And we can also then look at only a certain age of coins. And so it's very useful to do this, because if we look at a relatively young coins, so in this case, it's about 5 months, there's a lot more recency in the data, so you can see what's happening now rather than what has happened in the whole history of Bitcoin. And so based on that, you can. So the short-term holder cost base is just the average purchase price of young coins, so young holders, and they are more affected by recent news and events. Typically, if price drops, it's mostly short-term holders that are selling rather than long-term holders. So it's very useful to have this metric as an indicator, and you can actually use this for all kinds of things. We're going to get to some, but in this case, I used it to mark the difference between bull and bear markets within Bitcoin, and we can see that the second quadrant of the spiral here. It was completely red, yellow, there was not even a single dot of green. And actually in nearly all cycles, it was kind of just only red, that whole quadrant. And again, we got out of that quadrant, and we made the bottom in the south, and we started to have the first green appear again, a little bit. So the first, signs of, again, a bit of more bullish a bull market. It's not maybe yet a full-grown bull market, but I mean at least some the early signs. And So yeah, I think to continue maybe with the short-term holder, the usefulness of the short-term holder cost basis, we can also go to the next chart. And this is actually to look a bit more at the recent data. So what is Bitcoin doing now? So we can see the current cycle here. So we had the all-time high in April. Then we had the November highs. And then we made a bottom in June. You can see that touched that black line. So here I used the green line is the short-term holder cost basis, and then basically the red and the black line, those are the mezzanine and the floor, I call them. They are 2 levels lower than that. So and they seem to I chose those levels myself, but if you look at the history of Bitcoin. Price has almost never fallen below the floor, in its entire lifetime. And as well, this intermediate level has been touched many times. Like sometimes a local bottom is formed there. And so with the June low, you can see that we had like really a true capitulation events, and we even touched that black line there. Whereas actually the actual bottom that we had, I think it was in November as well. It only touched the intermediate level, the red line, but and then we actually crossed above the short-term holder cost basis, which is an indication that we're kind of getting out of the bear market. We're now in a bull market, and then we had a confirmation by actually again finding support on that same short-term holder cost basis, and we continue, and now we're kind of in the level again where we might. Have either find support again on that short-term holder cost basis, which would be bullish because that would be kind of a continuation of the bull market, or if we fall below, we could see some temporary downside, and maybe fall back to lower levels like the intermediate level or the floor.
Is there any logic to why this happened? Is there a mathematical reason why you think this might happen?
Yeah, so the logical reason is because short-term holders are more affected by price movement. So they will be tempted to sell more quickly than long-term holders. So when there are events happening, short-term holders will either sell and the short-term holder cost basis is the average purchase price of such short-term holders. So when prices are trading above the short-term holder cost basis, short-term holders are in profit, so they feel good in general, right? So if price is below the short-term holder cost basis, they are at a loss. And so this level of the short-term holder cost basis for that particular group serves as a level where either if we're trading above it and we fall to the short-term holder cost basis, they might step out of the market to step out at and not have any profits, but to not get any losses, right? And the same thing happens when we're below and when they're at a loss for quite some time. Whenever they get to that level where they're equal, then they might also step out of the market. That's why it's such an interesting level.
Recovery. Amazing.
So here's it's the zoomed out version of that chart. So the whole hit, more or less, it's since 2013, I see. But yeah, you can see that, this, the floor, it has been touched like every time more or less in the bottom of the bear market. And those intermediate levels have also been touched several times, soon after making a bottom, and that again happened this cycle. So it's a useful level to watch as a trader.
That's fascinating. Okay.
Yeah, we'll still continue with some spiral charts. So this is I like to. This is again a bit the bigger picture, but we compare Bitcoin to silver, gold, and real estate. We did that last time as well.
Yeah, let me just explain the chart to people who are listening. So where we have these circles, concentric circles. Are they concentric circles?
Yeah,
I mean, when you look at the spiral chart, what the big carrot's done, he's put circles in to explain essentially the market cap for silver, gold, and real estate, and how Bitcoin is chasing these down. And it's touched on the silver market cap a couple of times. Is that twice in the last year?
The last cycle we did in April and in November. I think in November we actually went above it just slightly, but yeah, we surpassed. Yeah, we surpassed silver's market cap just by a small margin, but then again we dropped back below it. But it seems if we continue the pattern, that indeed next cycle we will have to go above silver's market cap, and we're going to start going after gold, which will be cool.
Will be fascinating.
It will be fun. Also, because especially after the next halving, so in a year, Bitcoin's inflation rate will also be lower. It's now more or less the same as gold, but after next halving, which is already in a year, it will actually drop for the first time lower than gold. So it's going to be interesting.
Someone will have to check on Peter Schiff. That will be fascinating though, because the gold bugs just will be in disbelief.
Yeah, I mean, I think, once Bitcoin really starts competing with gold, it's going to be very interesting.
I mean, 10 trillion, that's a long way to go yet.
It's still, I still expect at least a full cycle. Maybe, maybe, I mean, I don't expect actually to trade above that the coming cycle. It's probably going to take another cycle after that.
Yeah.
Do we know what the price of Bitcoin would be for it to do that? Rough.
I have that mapped out. I have a chart where I have Bitcoin's price and gold's price if we would surpass it, but I'm not sure what the price is at now.
It's basically, but is it 500,000?
Yeah, about that. If there's not quite 20 million coins,
but 20 million-ish, 500,000. I mean, we could flirt with it. Interesting. It depends what gold does as well, though.
Yeah, and gold has been going up recently, obviously, because of recessionary fears and. So this, here, so I compare Bitcoin. It's a bit similar, but I compare them to the biggest currencies in the world. So we have the British pound there, the Japanese yen, the euro, the USD, and the Chinese yen.
The pound is fucked. It's coming for it.
We're now more or less trading similar to, for example, the Mexican peso or so. So already kind of. So and these are the biggest currencies in the world, by the way. Yeah. So Bitcoin already surpassed many, in market terms of market cap, but we're already trading at a similar currency, for example, the Mexican peso now, and we're going after the pound next. So that looks good.
I don't have to feel too patriotic about that one. Interesting. Fascinating.
Yeah, so here I plotted the Bitcoin halvings. They're scaled, to the current cycle. So you can see how far, how much of a price increase, for example, the 2013 cycle had. It would have gone more or less to 1 million almost if we would have the similar returns in this cycle, which is obviously not reasonable to think because the market cap has increased significantly. But I added here also the realized price. Those are those other lines that you can see there, and we can see that those bottoms they fell more or less at the similar moment in time below realized price. So realized price is again the average purchase price of all Bitcoin, so price only trades about maximum a year below realized price each cycle, and it seems that we're past that point now, and we made a low. So
I mean, the pattern here is every cycle, the percent growth we see is reducing.
Yeah. So those are diminishing returns, as they call them.
Yeah. So does it eventually get to the point where there's no returns to be made and we go backwards? Yeah.
So I have some evidence why I think that's not going to happen, and actually I think that potentially the next cycle might have a higher increase than current cycle. And I'll show the reasons for that, but it has to do with illiquid supply and each Bitcoin getting more scarce, and so we'll get to that in the next charts. But yeah, if you think, and the log growth curve again is one of those famous models, right, in Bitcoin, then you would expect diminishing returns each cycle, but if we look at the patterns on chain, what's actually happening, Bitcoin is getting more scarce, and I think when hype is coming back next cycle, I think it might cause higher price increases than that we had last cycle.
Interesting. Okay.
Yeah, this is still the same comparison, but now they're not scaled; they're just really on a normal price scale. So we can see again that year. I also mentioned this chart I showed in the last interview. where we have this period of a year where it's actually really a good accumulation zone. I think we mentioned that like last interview, like this is an ideal time to be accumulating Bitcoin. And we're kind of now past that red zone, you know, like, so I think our last interview was like 8 months ago or so.
Yeah.
Like, so that year more or less has passed now. It's still reasonable to buy Bitcoin or to average in, you know, like if especially if you think that next cycle we will reach prices higher than 100K. But yeah, the ideal accumulation zone was in that red zone, and where we made the bottom, obviously. So if we look at the amount of supply that is in circulation that is held by short-term holders, I think it's again shows where the short-term holder is such a powerful metric. We can use this kind of as a proxy for demand, or how much hype is there in the market currently. Because there's high amounts of young coins. That means a lot of new people are coming in the market, you know, and that's why these peaks here that you can see with they correlate with all the blue dots, you know, in the price chart. With all-time highs are made during those peaks. And yeah, as you can see, we're nearly at a low, like we're very low. So there's really not much of hype in the market currently. There's not many young coins in the market, which is also reason to believe that, I mean, that we cannot expect like high price increases. You know, like I think we're still gonna have some horizontal price movement, let's say. I expect that kind of to be the case until the next halving, you know, like, but yeah, it's kind of waiting for one of those peaks again in young supply where new hype is coming in the market. And it seems to happen more or less every 4 years, right? Like,
it's interesting that the previous all-time high basically had no hype. You know, the second time we hit 68K or whatever it was, 69K.
Yeah. The second top in the but that was actually a top made only on long-term holders being really excited about Bitcoin and expecting that the price would still continue to go above 100K. That's why. But if you looked at this indicator, you already knew that was not very sustainable, and so that's why we barely made a new all-time high there. By the way, we almost didn't. So it's the April top was actually the true peak of the cycle, also in terms of hype. And if hype is gone, it's not going to come back, you know, soon. It takes a couple of years. Again, it needs to build up. There need to be some catalyst, but yeah, it will come again next year. I don't see any reason why not.
If you had a platform with live charts for this, I would subscribe. I would pay to access that.
Yeah, you're a lucky man.
Is that on the roadmap?
You're a lucky man. You can go to bitcoinstrategyplatform.com and subscribe. You will
Is it already there?
It's
already there.
It's already there. Yeah.
That sounded like such a setup, didn't it? It sounded like such a setup. Danny, can you bookmark that?
Yeah.
All right.
Yeah. So here, we'll discuss a bit of the bearish case. So here I compared Bitcoin to the S&P 500, and we use TA because obviously we don't have access to on-chain analysis in traditional finance. So we can only compare the two through TA. And so we use the relative strength index, which is on a scale from 0 to 100, like what is Bitcoin's momentum, basically, or the S&P in this case. The blue line is the S&P. And so I zoomed out a little further, but you can see that the orange line, like so we had the recession in 2008. You know, we had the relative strength index touched like values below 20 there. Bitcoin, came forward out of that crisis more or less, you know, like, so it was launched, and but you can see that this you know, Bitcoin's RSI kind of follows the same pattern. In the beginning, a little less still, but it starts to correlate more and more, you know, with the S&P. So we can see the similar cycles there actually.
Why do you think that is?
Bitcoin.
Why do you think we have that correlation?
I mean, so yeah, as the S&P as well is a bit of a risk asset, you know, like, so Bitcoin is correlated to risk assets currently more than it was in the past. But it seems to be the natural human psychology, you know, like, so these market cycles, they obviously don't only happen they happen in all markets, and risk appetite, or like, you know, that happens in all markets. And so So that's why this correlation is there. But yeah, this again shows why also we cannot say that the halvings, which actually those are the horizontal lines that you can see there, those are actually the halvings in time. So we made a bottom, and then the halving comes, and we do see that after the halving, that Bitcoin's price like outpaces kind of like the S&P, like, so there was, especially in the first cycle, for example, if you look at the first halving, Bitcoin's RSI spiked way higher than the S&P did. So, but it has been like more similar. I think that's why we can also, if you look at other macro, if you look at other indicators in macro, Bitcoin also will follow the similar cycle pattern. So that's why also I do believe the halving is a bit of a narrative. It still causes obviously the hype around it currently probably more than the actual halving, but it still causes it still serves as a catalyst. But this is kind of worrying in a way, because if Bitcoin's price stays correlated and we do get a recession, later this year or early next year, and we get to an RSI in the S&P of like below 20 again, like we did in the dot-com bubble or in the Great Recession, Bitcoin's price could temporarily, we could deviate a bit from the 4-year cycle, in that sense.
So we kind of need the bull market before then.
Yeah, well, I think it will kind of go hand in hand. If we have if there's going to be a recession, I don't expect an immediate. I think it will just be we will have to. A recession takes about a year, 2 years, So we'll just have a bit of a delay, before we get to the bull market. So it depends on what's going to happen on a macro level with Bitcoin. If we do get a recession, we can have a bit of a delay in the next bull market, which would also deviate the cycle pattern. So this is a very, I think, an important chart to keep track of, because if we start going, if we get an RSI below 40 again, in the next months or so, that's a severe warning signal that we could potentially or Bitcoin needs to decorrelate, which also can happen. If Bitcoin becomes more, if we get the digital gold narrative, it will be interesting to watch. I don't know if that will happen. For now, it's quite correlated to the S&P, but we could decorrelate, and it's possible. And definitely, if we look at some of the charts later that I'll still show about illiquid supply, so how Bitcoin is getting more scarce, there is a possibility that we actually might decorrelate.
Okay.
So this is the
Hodl model.
The Hodl model, or these are the charts that go along with the Hodl model. So here is Bitcoin's supply shown. That's just the circulating supply. So the orange line that you can see, it's 19 million something coins that we have currently in circulation. And here I made the division between illiquid supply and liquid supply. So the orange part of the chart is actually the supply that's available for trade, whereas the illiquid supply, the blue part of the chart, is actually coins that hardly move. And so instead of instead of looking at the age of coins, what we do with illiquid and liquid supply is looking at the spending behavior of coins. So if someone spends less than 25% of their holdings, it's considered illiquid supply. Whereas if someone spends more than 25% of his holdings, he's considered an illiquid person or a liquid entity, because he might sell Bitcoin at any moment in time, basically. And so this is very interesting because especially the orange part of this chart, so the liquid part, so the supply that's actually available for trade, you could see that if you think of price as a function of supply and demand, the orange part is actually the supply part of the function. And so it's obviously a proxy. It's an approximation. It's not a perfect indicator, but it gives it does a decent job, in my opinion, about what is the actual supply available for trade.
Yeah, and the interesting part of this is that the circulating supply, the liquid supply, is every 4 years it's reducing.
Yeah,
So that's going to start going horizontalish.
Yeah, so the circulating supply after every halving, the steepness of that curve will basically halve because the issuance halves every halving, and so that flattens out. We're already at 19 million, and we will only go to 21 million in the next 100 years. So, but the illiquid supply seems to be growing. And so where the idea of the Hodl model is that the third halving kind of was an inflection point, because as you can see in this chart, the supply issuance outpaced illiquid supply growth until the third halving. But after the third halving, suddenly illiquid supply is growing faster at a faster rate than new supply is entering Bitcoin in circulation. And that's kind of fascinating, because that means that Bitcoin is getting more scarce.
Yeah.
And that has only been happening for a relatively short amount of time. And we started out with a relatively high amount of, actually around that third halving is the highest amount of available supply, which so a very abundant Bitcoin, let's say. So, and we had the kind of disappointing, perhaps, bull market after that. But so if you think that, we had a lot of supply during that bull market, it makes sense that we didn't get to like extreme high prices. Whereas next halving, it looks quite a bit more bullish.
Definitely.
Yeah.
Wow. That's a cool chart.
So here's the Hodl model then. So what does the Hodl model do? So it tries to kind of predict the growth rate of illiquid supply, and because we can map, Bitcoin's supply issuance schedule is known into the future, and so we can map the Hodl model, or we can try to predict like what is liquid supply going to do, and the Hodl model is a very conservative model in this case. And you can see also that illiquid supply is kind of like quite a bit above the model value there, and in the bottom chart. We look at the same thing, but we look at it in percentage terms. So how much supply how much supply is illiquid of the total supply in percentage terms, and so we can see that we start at 100%, because in the beginning of Bitcoin, nearly all supply was illiquid, and then kind of supply starts moving more and gets spent more, and then so it dropped. But at that third halving, we made a low there. So the Hodl model makes a low, and illiquid supply made a low there, and we have been rising since. So that means that again the available supply for trade is shrinking. So Bitcoin is getting more scarce since that third halving, and this was the model that I also showed last time. And what I didn't show was this was the conservative Hodl model. I also had an optimistic Hodl model, which is the Hodl model S.
Oh, wow. That's the S curve.
That's the S curve. Yeah. The Hodl model S, which is a model that I actually have never shared yet.
Hold on. Where are we here?
2030, that.
2030.
Yeah.
Do we want everything like Bitcoin to become very illiquid though, or do we want people spending it?
If you think of Bitcoin as a store of value, mainly, it makes sense that most of the supply is just stored, right? But there will be always a small part of the supply that's liquid, and that will be used for trade. But if you think of all the money in the world, like most value is also stored either in real estate or bonds or like in all kinds of things, right? It's just sitting there. Whereas the money that's spent on an actual day-to-day basis is a lot less. So the Hodl model S I have never shared. It's actually the first time that I show this model. The reason I didn't share it last time also was because it was kind of like too optimistic, and coming from a stock to flow model that was kind of like had a bit of like a negative impact on. I didn't want to. It's better to have a conservative model and be wrong to the upside than to have an optimistic model and be wrong to the downside. But even now with the Hodl model S, we're actually still trading. Like the illiquid supply is still above the model value, even with the optimistic model that I had.
So by the end of the next cycle, that really could get crazy.
Yeah, if we keep track with this model, I don't know. I mean, we will have hyper Bitcoinization within 2 cycles. I can also not believe it myself. That's why I didn't share this chart last time, and why But I think now we've been past a bit like the whole stock to flow model, and it's fine. And especially since we're still trading above it now, I feel like it's good to share this.
This is where it'll get really real with all other football clubs, where they'll be like, oh. This is why he did it.
Won't you be in the Premier League in 8 years?
No.
Championship, maybe?
No. I mean, I'm thinking, I'm looking about the middle of the next cycle. What's that? 2, 3, 4 years. I think it's by the time we hit the league, our treasury will start accelerating in price, and then we can probably build that 50,000 seat stadium in
Bedford.
Yeah. I mean, if this model is going to continue keeping up, you can hire some really good players.
Oh, this excites the fuck out of me.
Yeah.
But it's funny because, when you first see prices go up, you get really excited because you think about personal net wealth. But I'm beyond that now. All I think about is this football club. How do I get this football club up the leagues? And money is a function of this, like available funds to invest in players, the team, your facilities. I look at this and think, oh, we can do this.
Yeah. Yeah. I believe you can get to.
Did you come to a game? I can't remember.
I went to see the field.
Oh,
but
yeah.
there wasn't a game.
There wasn't a game one. We're going to get you over for a game at some point. This is the coolest chart in here.
Mm-hmm.
What does it make you think?
I don't know. I think I like the idea of spend and replace, and then you don't have as much liquid supply.
But you can still spend it. It doesn't matter what the.
But then it's liquid. Then at that point, if it's moving regularly, then it's become part of the liquid supply, presumably.
Yeah, but the value you've got is so much more that you don't need to spend that much of it.
Mm-hmm.
Yeah, if the dollar value increases, obviously you need to spend less Bitcoin.
Yeah, But I'd hope more and more people start spending and replacing as more and more people accept Bitcoin. So I guess that then increases the. I understand the point, but
but also more and more people will use it as a store of value. So that's and
both can be true, right?
Both can be true at the same time.
Both more can be spending, and
because if you're spending and replacing, it doesn't remove the store of value aspect of it, but you also are actually using this.
And if we're recruiting more Bitcoiners at an increasing rate, we can all be spending more.
Yeah.
By the way, in this model, so here the third halving serves as this inflection point where Bitcoin becomes more scarce. But what I don't show here, but I do think there will be a second inflection point, because here kind of all of Bitcoin supply will be liquid by 2035 or something.
Supply shocks.
But that obviously won't happen. There will always be liquid supply.
You'll just need to zoom in more. That's the point. Is that there will always be a gap.
Yeah, there will always be a gap, but it will. But I think that gap will stabilize at some point.
Yeah.
It's the sooner the closer we get to hyper Bitcoinization. So there will be a second inflection point where because here the available supply will kind of shrink to zero, but that's obviously not going to happen. So there will be some second inflection point where and that likely will be more close to hyper Bitcoinization, where we will stabilize in terms of liquid supply.
Love this chart.
Can I just ask one more question on that? Because I can't quite figure this out in my head. If we move to a world where everyone's getting paid in Bitcoin and spending Bitcoin, everything becomes much more liquid, presumably, because coins are moving hands. Even though there's not a US dollar trade or a great a pound trade, the Bitcoin is swapping hands more.
Yeah, I think that's why I think there will be a second inflection, but it might be Satoshis, that are kind of swapped. So it depends on Bitcoin's price. So the higher Bitcoin's price gets in US dollar terms, the less Bitcoin needs to be moved.
But the more of the global economy that goes to being paid in Bitcoin, then I think that could probably outstrip the sort of the shrinking. So
if price does a 10x and you start moving, if price does 10x or so, then also the supply that you trade would be 10 times less, in dollars terms. So,
but at the moment,
Bitcoin can grow a lot in terms. If the user base grows times 10, but the price also goes times 10, like then
I don't know
you
if
have
it's-
the same amount of kind of liquid supply trading.
But I don't know if it's just the growth of the user base, because like the vast majority of the user base, like 99.9%, I would guess, are not getting paid in Bitcoin. And so if like the way that people interact with Bitcoin changes, I guess that could change that ratio as well. Because if everyone who, like, if say that 0.1% of people get paid in Bitcoin now becomes 10%, then that can, like, the 10x in price can get outstripped by that.
Yeah, I also think, by the time that nearly the whole world gets paid in Bitcoin, we're not going to measure in USD terms anymore. Like, it's not going to be that value. But we can still look on chain, like how much supply is going to be used for, like how much supply is going to be liquid and how much illiquid. That percentage we can still see. And I think, and I cannot predict that now. But I do think, there will be a second inflection point
where it starts going the other way,
where we again maybe start increasing or at least stabilize in terms of available supply for trade. So this is it's again zoomed in on that orange part, which is the available supply for trade. But here we look at it at percentage terms. So how much percent of the supply is available for trade? And we can see that in the first halving we had around 20% of the supply was available for trade, and we had these huge price increases that came with that. Then we had in the second halving we had 25% of the supply available for trade. And we still had we did 20x or so in 2017. And then the third halving, so that was actually the inflection point, we had the highest amount of available supply for trade, which you can see like quite clearly in this chart. And since then we have been going down.
So we've just lived through what should be the hardest cycle.
Actually, I do think so. Yeah. And if you look at Bitcoin scarcity, that is the case. Like obviously it also depends on all events and how much demand there is, and so there's other factors at play. But in terms of Bitcoin scarcity, the highest amount of available supply was available around that third halving. So
and so then it kind of makes sense that we didn't really have a 10x cycle that a lot of people expected. They expected it based on previous cycles, but they weren't looking at this data. And for us to have such a huge, jump from, we kind of did what the bottom was 3K, and we topped at 60. So that's really a 20x actually. But I think, there's some people thought we were going to go to 100, 150, 200, maybe even 300, because they were basing it based on the growth of a previous cycle. But with a massive increase in the supply available for trade, that made it a lot harder.
Yeah, I usually measure from the previous all-time high. So in that sense, the all-time high, the previous all-time high was like 20K, and so this cycle we only got to 69K. So it was like a 3 point something x. Whereas in the 2017 we had the 20x. We went from 1200,
nearly about 18,
to something like that. But if next cycle, and it looks like it, that we're going to have a supply that's available supply for trade that's going to be more similar to the 2017 cycle.
So another 18x.
So
hold on, that would be on 60K. No, come on, that'd be a million.
Yeah, that would be. Yeah.
Shit, what was my bet with
Hodl?
What was Root says we definitely hit a million next cycle.
He promises.
He promised us. What was my bet with American Hodl?
I think it was it $1 million by 2027?
I think it was. He could win that.
You might lose, yeah.
I fucking hope you lose that bet.
Oh, I hope I lose that bet. I've never wanted to lose a bet more than that one.
Yeah.
Colin, do you understand why we want me to lose that bet?
Yeah. Yeah, so it is truly amazing. I think this is really the most underrated data. That's and I think that's kind of even that adds to the fact that it can happen like more likely, because no one is expecting it. Everyone is expecting diminishing returns, next cycle, just because everyone is focused on this locked growth space. Also, all history of Bitcoin has been diminishing returns. If you look at price, you will only think diminishing returns. But if you think of price as a function of supply and demand, now the supply is really getting more scarce. And it seems to be, I made a conservative model, which I shared 8 months ago. I actually made the optimistic model before the conservative model, but I found it too optimistic to share. So I tried to make a more conservative model, which I shared 8 months ago. But now I feel like since we're still trading above it, it's I also have to share the optimistic model. But even the optimistic model is not optimistic enough, apparently. So it's at that fast pace it's going, and the optimistic model is kind of like by 2030, which I also cannot believe. So like I don't know, but the data is the data. I mean, obviously also demand is a function, but we showed that with the short-term holder supply, which I think is a pretty good function for demand. So you have these peaks coming in. So, but if the supply is kind of scarce around the next halving, and we get one of those spikes again in hype, like in short-term holder, a lot of new young coins coming in, which I do expect at some point. Price could go quite insane.
What do you think we top out in the next? What's your strike price?
Yeah, I don't want to make any price predictions.
I know you don't. I don't. Why don't we all make? Should we all write one down and come back to it? We don't have to tell them.
I just said 1.2 million, right? I promised. No, it's no. I have a.
Holy shit! If we went to 1.2 million,
Premier League, here you come.
Premier League, here we come.
There is some caveats here. I mean, I do think since the increase in market cap, it does become a little more difficult for the price to move. So even if we have a more, if you have a scarcer supply, I mean, it could still be harder to have the same amount of increase as we did early on. But for me, like I think 100K next cycle is like the bare minimum. Based on the spiral, based on just available supply for trade, it seems very unlikely that we'll not surpass that.
Yeah, and I wonder if we did get up to those crazy numbers, then we would see more liquid supply come in, because there's people who have just gone from, I don't mean this to come across like a dick, but say you've got enough Bitcoin, you're worth 100,000, you're suddenly a millionaire. It's like, fuck, well, I'm going to sell half of this. I can buy a house or a car. Mm-hmm. So like people who just have such massive gains.
We always see during bull markets that long-term holders are selling, and taking profits. And I do think since we didn't reach prices, higher than 100K last cycle, that a lot of long-term holders are still sitting on their Bitcoin, kind of that they would have liked to maybe take more profit in the last cycle, and so maybe also more tempted to sell a bit of that if prices start reaching those levels. But
no one ever takes profit. That's one thing. Everyone always expects it to go much higher than it does, and no one ever takes profit.
Yeah. So here, so you can see these the conservative model and the optimistic model of the supply, and so you can see that available supply is still trading below, is still below the optimistic model here, and so that's it's just kind of amazing. So here, I still showed this demand curve. So imagine getting another spike of demand with like less supply in the next cycle. I do think 2017 price increases, maybe less because we have an increased market cap, but I wouldn't be surprised if we surpass the last cycle's increase, in price. And so I said I don't really like to make price predictions like in the future, because I also think on-chain is not like very good at predicting like the future, like it's more, I think on-chain is more valuable in telling like what's currently happening. Like give me a block and I tell you what's happening. Like so I made this on-chain value map, which is actually built a bit also on Willy Woo's work. So the bottom indicator here is actually one of, a bit adjusted, but it's one of the indicators that Willy Woo did, which is coin value days destroyed. So it looks at how many coins, how many days a coin builds up, and how many of those days are destroyed once there is a transaction of that coin. And so it's kind of useful to make a bottom indicator. But the top indicator of this chart, I think, is very promising, and that is actually based on the average money invested in Bitcoin plus the available supply for trade. And it's a very simple indicator actually, and it gives this near perfectly, like we touch this top line of this value map near perfectly with each cycle. And so since Bitcoin is getting more scarce, also that line has kind of flattened out. So you can see in the last in the current cycle, you see that line kind of just stays relatively high. It's even higher than it was at the peak in April, and that is because available supply is shrinking. So that line kind of is and considering it will. So if more people start buying Bitcoin, so if new hype is coming in, then this red line will start to move up because there's more Bitcoin's average purchase price will move up. So there's more money flowing into Bitcoin, which kind of measures, and it also measures the available supply for trade. And so based on that, I think it's going to be one of the better top indicators for next cycle. But I cannot predict into the future because I don't know how much money is going to be invested into Bitcoin over the next cycle, and I also don't know what tradable supply will be in the future. But we can look at the current moment. So as soon as this model, if Bitcoin's price starts kind of hitting this red line or it gets close to it, I think it will be kind of become a top signal.
You know what I'm going to say, Danny?
I don't, go on.
We need some more Bitcoin. We need more Bitcoin. We don't have enough Bitcoin.
No one has enough Bitcoin.
Saylor's going to be the richest person in the galaxy.
Yeah, I do think so. Yeah, it's. I also need more Bitcoin.
We all need more Bitcoin. It's amazing. I love your charts. I think it's brilliant. I think it's very cool. It's super interesting. There's a lot of look. I understand they're just models, and models can be broken.
Yeah.
But it's super interesting. The bit that just really interests me is the available supply starting to drop. That inflection point is super interesting.
Yeah.
And you have that against growing demand.
And almost no one is talking about that, which is, people say, Bitcoin is scarce, but here's actually the data showing Bitcoin is getting more scarce. And kind of not many people are paying attention to this.
And so when your thing, bitcoinstrategyplatform.com, I'm definitely advertising that right now. I can get live versions of these charts.
Yeah.
I am on. We need to subscribe to that. Ruud, that's amazing. Anything else you want to talk about?
No, I kind of wanted to do the follow-up of the last charts, and we went through them. So unless you still want to discuss some football or...
No, I tell you what I want to do is I want to come back and have a chat with you in about, I think we need to do this in about a year.
Yeah, just before the halving.
Ooh, before or after?
Yeah, around the halving would be a very interesting moment.
What about halving day?
Yeah.
Why don't we do halving day together?
Yeah.
Do we know when that is? When it's estimated?
About April.
Yeah, it's the end of April.
You know what that is? It's end of the you know what that's end of the football season.
Okay. Yeah. Let's do it.
Halving 2024. All right, Ruud, amazing. Do you want to reshow your platform? Tell people where to go.
Yeah, you can go to bitcoinstrategyplatform.com and sign up. You get free newsletters, and if you become a paid subscriber, you get access to the platform with all these charts.
How much is it?
It's $21 a month, but currently there's a limited 30% discount. So it's
why are you discount? You do not. I would switch that discount off now. After people hear this, they're going to be on it. You've gone for $21 to be like a Bitcoiner. But you could charge way more for this.
I could, yeah. It's extremely valuable info, I think.
Yeah. All right, we're going to sign up. Ruud, love you, man. Thank you for this.
Thank you.